Hello, everyone. Happy Easter. I hope you're having a wonderful Easter with family and friends, or if you're on your own with your pets or with nature or whatever it is that you do and that you're enjoying. I hope you're really, really enjoying it and getting the most out of, out of life and the world around us. I'm going to do quite a big video, it's probably going to have to be in parts because, I've done a whole diatribe of like 5 parts on here on my community page and on Twitter, explaining the whole plans and the origins of digital economy under King Charles and his new green banking imperialism or green colonialism. Now that might be a lot to take in and you're like, wait, what, how, what, why? Because we haven't explained any of this. I've explained open banking, and it has been just kind of like, sitting on the side. I found out about open banking because I was finding out about insider moves and strategies within the Australian banking and finance industry. And I questioned it very, very highly. And after researching it, I found out about a thing called open banking, which really is a covert back-end structure to the new digital economy and financial ecosystem that the City of London has created under the instruction of King Charles, and for the restructure of the British Empire and for the privatization of all assets. I didn't understand that part, the ownership transfer, other than, when we had the voice referendum in Australia, how Prince Philip had already tried and attempted through his conservation trusts all over in Africa and Australia, had attempted to privatize natural assets and resources, and they already destroy natural assets and resources through Rio Tinto mining and other mining companies that they own. There is a LaRouche, which I'm happy to send you. There's a LaRouche article all about the Windsors, about the companies they control, including Unilever and Rio Tinto, of course, etc., etc. I find it fascinating, but I don't go off of it as truth because I find LaRouche and those publications a bit questionable. I'm just not too sure, but it is an interesting read. I can give you that link. But there's been some progress tying open banking to what's happening with the digital economy. I knew that it wasn't the whole point of the digitalization of the economy. There has to be more than that. There has to be a reason. I didn't even connect it to environmentalism. I didn't connect it to the United Nations or the World Bank or Bank of England per se, because it just felt like environmentalism was a way to force us into a new political structure rather than an economic one. And I had questioned, and I do question very much the weather-controlled climate events that have been happening all around the world, like Haiti. Sorry if I've pronounced that incorrectly. In Australia, we've had several bushfires are a big deal here, but they're usually 6% are natural, and the rest are usually arson. And so anyone, like a government official, could just pay someone to start a bushfire in Australia, and then we can call it climate change, and then the insurance goes up, or we have a government buyback program. That's what's happened in New South Wales here with the Lismore floods in 2022. There was a government buyback program, and the government bought very arable farming land and also land of private individual ownership and buildings, dilapidated buildings, saying that they were helping helping citizens, but really it was just all by design. All citizens or Lismore residents had to wait, if they had insurance, had to wait 2 years to get their insurance claim back. They were then so desperate and just so traumatized from, hearing people die and the homelessness and the chaos that has ensued, and that the government has left Lismore in that state, that they, a lot of them would just go, well, I cannot live in a caravan, I cannot live in poverty and I have none of my values anymore. I don't even have a car. I don't even have like any assets anymore. I just want to sell this property and to get the fuck out and to live my life. And a lot of them, especially ones that are retired, want to just enjoy the rest of their life, and they just they don't really want to have to suffer and endure that kind of limited lifestyle and standards, which makes a lot of sense, but that's what they were relying on. And it's happened all over. There's been an increase in climate events. That those Lismore floods were so unexpected that it broke the levee, which I'm sure they knew that was going to happen. And the last flood in the 1970s, they raised their houses to meet that level, and it was hitting their 2-story houses, their roofs, and a lot of people drowned in their homes because they couldn't escape up onto the roof or escape the house or the town. A lot of them were old, elderly, couldn't drive, didn't drive. A lot of them just, drowned. This has happened all over. You've got the LA fires, you've got the California fires, but then you also have in developing nations a hidden economic situation where it's an easy, well, it's not really a fight, is it? When private companies in the private sector are starting to take up and own all water assets and land assets as well. So that's happening as well. But I hadn't tied that all in. I always thought, well, climate change and environmentalism is the new peace. That's the new slogan for the new imperial restructure. I knew that because peace in World War II was what was used to create the UN, to have all the treaties, to have all the think tanks and the NGOs, to internationalize trade, to open our economies, to standardize our economies, to then collapse our industries for 50 years all over so we can be standardized as a whole globe, that our countries now can be culturally standardized with interface strategy. We can be economically standardized with, hitting inflation, well, depending on what's necessary to collapse each industry. But usually speaking at this point, inflation, we had the artificial housing market, the GFC, the global financial crisis. I'll get into that, as that was also by design and created to get us into this mess and to move forward this restructure. And also then politically, if you can see the destruction, by design, the destruction of all governments and faith and trust in every prime minister or president. That is intentional. You have the psyops of Macron and his wife. You have Trump with his theatre and his jazz hands and his lies and COVID. And you've got Elon Musk and just everything. Then you've got Bernie Sanders, who's all about environmentalism. He's pretty much a Carney. Mark Carney, you've got him who led this environmental finance, actually created it in Bank of England for King Charles, for the Empire, and now has been promoted to be Prime Minister of Canada. Canada has always been like this, kept USA in line with the British Empire, because Canada was always the British Empire's, like, how would you say, wingman or second in command in the Americas. And yeah, so that everything that's happened, even with the water asset control transfer, was led by Mulroney, led by Canada, with their water resources and the selling of a hydro plant. When the Bilderberg Group came in the 1990s and was talking about who would buy up the hydro plant, and trying to create a water transfer. That's why you've got the North American Union, and what Trump's been promoting. But really what started with Reagan and Mulroney, Trump has now implemented. That's all for water asset transfer control, water asset control transfer, or transfer control, to Mexico and to the US of Canada's water resources, but it'll all be privatized, which makes sense with the Bilderberg meeting. There's just so many things to get through and to explain, and I'm going to explain them. But what happened last night was there's an account that I talk about here a lot called Escape Key on Twitter. I just found a repost of one of their posts about something called blended finance. And when I didn't go into it too much, I was about to go to bed. And I read, just like I skimmed over, and it was about how blended finance has the same structure as the mortgage structure of the global financial crisis. And the tranches, the mezzanine tranches that were created. If you know about this, you'll know, but I won't explain it because it's just jargon. But how the CDOs were created to pretty much collapse the mortgage structure of the global financial crisis, and then that ensued. Basically, they're using the same fundamentals or foundations of that whole creation, CDO creation, and using it to create what they now call blended finance. And blended finance is, how would you say, the public sector investing, making investments, or governments getting a cheap way of governments getting easy, cheap capital from the private sector, and in return they back their investment, or what the capital that they're wanting to obtain. They back it with the natural assets that the government owns, and then by design, when that will fail, when these tranches, or how it's set up, when this investment will fail, which I'm sure these governments are very aware of when they get into this investment. This is the whole point. It's actually meant to, by design, to collapse. When that fails, and it won't be recorded or published in any articles, I'm sure of it, when it collapses, it's a technocratic transfer of asset ownership, of natural government asset ownership, to the private sector, because the private sector are the ones who are giving the capital, and they are the senior players in this investment strategy of blended finance. And when the strategy of the investment fails, we'll be left with the problem, but the government will just transfer ownership of those assets to pay the debt that's owed. They will just transfer the ownership of those natural assets over to these private investors. That's in a nutshell what blended finance is, and what the article was suggesting. I didn't know that at the time, and I was just skimming over, like, oh, okay, so similar to GFC. Okay, well, this goes with everything I've believed, that the GFC was by design, that everything I studied and believed with the GFC was actually not a natural collapse. It was to get us to this point economically with the inflation of 2020. But I thought it was more to get us into a crisis rather than the future restructure of the economy, which we'll now get into, because now it looks like that the GFC was a prototype for what is to come. And I skimmed over and I asked Escape Key, like, what do you mean? Like, why would they want to collapse another economy? Or I didn't understand the gist of it at that point, that who it would hurt and how the assets could be transferred over into private control. Sorry. And I asked, what's the point of it? Another collapse? Like, why? You wouldn't need another collapse. We're already, quite fucked, in a sense. And they said to transfer all of the world's assets. And so then I looked into it today and I've read up on it on my Easter. I don't know why I do this to myself. I was meant to just have a coffee and enjoy a read, and now I'm just like so involved in this rabbit hole. It's crazy because I'm connecting everything, like these climate events, like open banking, like digital ID. I'm connecting it all to this whole financial ecosystem and the origins of that ecosystem with Charles and City of London. And we get to this point of talking about this green imperialism that's going to be created through the front end, which is this blended finance, and the back end of open banking and digital ID. And also how certain events and things have helped push this through, like the pandemic, like wars, like current wars, like the climate events, like I've said. There's something else that I've missed that I can't think of. And the global financial crisis. And of course, inflation pushing it forward too, which was through the pandemic. So let's get into it. This is going to first explain to you the basics of a proper explanation without any use of jargon of the blended finance structure. I think this is a good place to start, because then we can go back into let's ask for more context, and then let's kind of like expand out and get a broader, bigger picture of this so we can understand this as a whole, because it is really overwhelming. It's really scary to talk about and to listen, but once you listen and once you understand it, it just makes a lot of sense. And I hope that it helps you just having a bit more clarity and understanding as to what's been going on. So, Charles's legacy is essentially turning the Crown's landed wealth into financial instruments under the guise of saving nature. How else, alongside open banking, why was the GFC of 2008 a prototype for this, the ultimate reward system? 1. What is blended finance? Don't mind my size, by the way. There's going to be a lot of them. 1. What is blended finance, and how does it resemble CDOs? Blended finance combines public or philanthropic capital, in brackets, junior or concessional capital, with private capital, senior equity or debt, to de-risk investments in high-risk sectors like climate, agriculture, or infrastructure. This mirrors CDO structures from 2008. Senior tranches, AAA rated, least risk, lowest interest, were held by cautious investors, and the mezzanine and equity tranches, which were extremely high risk, were held by return-seeking players. In blended finance, the roles flip, where private investors hold senior equity, guaranteed return, lower exposure, so safe yields, safe rates of return. They know what they're going to get back. So it's a safe way to profit. Public and philanthropic funds take the junior risk, so public funds, first to lose the money. It is a quiet public to private risk transfer. Quiet as in covert, as in soft power. If anything fails, as in manipulative, as in deceptive, but this whole thing is happening before your very eyes and has been happening for a very long time. 2008, the global financial crisis. So there's been a lot of work done. If anything fails, the taxpayer eats the loss, not the investor. As always, our economy will go to shit. But they know this. Why does this system favour the private sector? This structure is designed to de-risk private capital. As I said, it's a safe risk avenue with promised rate of return. Protecting private sector investors using public subsidies, exposing public sector investors. So it exposes the public sector investors, like governments, not the private sector, while they get their returns guaranteed. Guarantee returns to the private side by shifting loss absorbing functions to governments or development banks. Preserve asset ownership rights for the private investor, especially if they hold senior equity with collateral rights. So if a venture collapses, the public sector gets wiped out. The private investor can seize the collateral, e.g. land, forests, infrastructure, due to their senior position. They may also retain rights to future revenue streams like carbon credits, ecosystem services, or water rights. Just think of the City of London, pretty much, or the Crown being these private investors with all their companies. Like Rio Tinto, they would then own the land, to then mine the shit out of the land. The Amazon could be completely gone by then. There wouldn't be any more financial tax loopholes that they would have to go through. It would be an interesting situation. Wind farms would be everywhere, which coincidentally is meant to be Prince Charles's now main revenue stream for his income. How it was all financially restructured. Was it last year or the year before? Interesting, huh? So if a venture collapses, I've already said that, haven't I? That's how green finance becomes privatized enclosure of natural commons. How could this collapse, and why could it affect public goods like forests or water? Just remember everything, this introduction of water famine and water conservation, never been an issue in our life before. I just want you to know that now. Let's walk through a scenario, step by step. 1. Blended fund is created. The public partner puts in concessional loans, grants, or guarantees. So the government puts in loans, grants, or guarantees. The private investor, let's just say Rio Tinto, puts in senior capital, often structured, or BlackRock, often structured to receive a preferred return. 2. The fund invests in agroforestry, land restoration, carbon offset projects, etc., often in the global south. 3. Revenues underperform due to commodity price crashes that they control anyway. Bank of England, City of London. The same private investors own the market, own how prices are controlled, how they can crash. Underperform due to commodity price crashes, political instability, or climate shocks. You could have a massive climate event and the pricing goes down because of the land being damaged or whatever it may be, like what's been happening for quite some time at this point all over the world. The project enters distress or default. Number 4. And number 5, public backers absorb losses because their capital was subordinated. 6. Private capital, being senior, triggers security clauses, possibly including legal claim to underlying land, resources, or credit streams. In countries with weak governance, the public may never know that ownership changed hands. This is not theoretical, it is structurally built in to many of these deals. The private side's downside is capped, just so I don't get any conspiracy theory, wacko judgments, or accusations. The private side's downside is capped, the upside is unlimited. By design. 4. The role of natural, so we've done that step by step, so we're up to here. 4. The role of natural asset companies, NACs, and carbon markets. This is where it gets even more concerning. A natural asset company, or NAC, as proposed by entities like the NYSE and Intrinsic Exchange Group, IEG, amazing, allows for monetization of ecosystem services, clean water, biodiversity, carbon sequestration, without the owner needing to produce a product. It's complete market creation, much like BRICS. It's a new investment strategy. Imagine a Rothschild-backed NAC holding forest land. It receives carbon credits, biodiversity offsets, and payment for ecosystem services. These credits can be sold to polluters, developers, or speculative traders. The land becomes a financial asset detached from people who live on or near it. Now, combine this with blended finance. Public funds help acquire and maintain the land. Private firms extract rents from it forever and ever, so it's feudalism, while through the private sector. And if legislation enables these natural assets to be traded or securitized, you've created a carbon-backed asset bubble, potentially subject to speculation, leverage, and systemic risk. Again, no longer democracy, no longer capitalism. You will never own what you live on. You will never be in control of your food and water supply or nature itself. It will be completely under the control of man. But you're meant to pretend that there's a population issue. Crazy. Why is this dangerous? No public accountability. Most deals are opaque. Perverse incentives. Maximize returns, not public good. Financialization of nature. Turning forests, rivers, and biodiversity into profit streams. Risks. Alienating local communities, violating Indigenous rights, and accelerating land grabs. No more the voice referendum for Australia. Not necessary. No more titles or UN laws to pass. You don't have to. It's done another way. Moral hazard. Private firms take no real risk but reap all benefits. This is exactly what happened in 2008, but now with ecological assets instead of mortgages. The Moringa Fund. This is stated in the article of Escape Key. I will give you the link to that article and you can have a read as well. The Moringa Fund, a case study in soft colonialism? ? Soft colonialism. King Charles and his soft power. Colonial empire of the Anglo-Saxon British Holy Roman Empire. Everything identified about the Moringa Fund aligns with this structure. Founded early, before the concept was mainstream. Public partners carried risk, GEF, AFDB, Proparco. Land control is privatized benefits, carbon credits, premium markets flow to stakeholders. Farmers likely lack ownership and autonomy. It's effectively development finance in service of private wealth accumulation, dressed in the language of sustainability. Wink, wink. Bottom line, blended finance can easily become a stealth vehicle for wealth transfer, asset stripping, and green colonialism, especially when the public carries all the risk and the private side holds the senior claim. And if, when defaults happen, like CDOs in 2008, the fallout will hit public budgets, national sovereignty, community land rights, biodiversity, and ecosystems, and ultimately the taxpayer, you. Now, there's a link to that article. I'll try to send it. I don't know if my comments will go through because they're auto-deleting my comments now. So we'll just see how that goes. But usually speaking, when the algorithm picks up on this language and these words, I very much doubt, or I hope that I'll be able to comment on my video, but we'll see about that. This is the article here, just a screenshot, all about the Moringa Fund, United Nations Department of Economic and Social Affairs, UNFF Clearinghouse on Forest Financing. I'm going to try to get through another one so we can try to do maybe 2.5 out of 5. So we've only got 2 different videos to do. Let's see how we go. So I'd just like to point out that coronation invitation of the Green King, King Charles. That's his legacy. Remember, green imperialism. There you go. Part 2, the Green King. The Bank of England, along with other central banks and the North Network for Greening the Financial System, NGFS, helped make this narrative credible. Blended finance was built by the financial sector, codified by multilaterals, and sold to the public by philanthropy and consultants. We're trying to get now that we know about blended finance and the implications, we're trying to figure out who created it and when and why and how it's all connected. These are the consultants, all the NGOs, and you'll go through them and go, oh, so now they're all connected with World War II, peace, internationalized organizations that were created when imperialism supposedly crashed. They created these think tanks and organizations. It was a new restructure of the empire. You'll see like OECD, and you'll see G20 initiatives like the Global Infrastructure Facility. You'll see the SGN goals and the UN Addis Ababa Action Agenda, which is the SDGs, the SDG goals, Sustainable Development Goals, Agenda 2030, WEF, World Bank, Rockefeller, Gates, Ford, Rothschild, Soros. You can see why Charlie needs this to work. All of his NGOs, puppets, and Agenda 2030 are involved. Where the Bank of England enters meaningfully is in the realm of A. Climate-related financial risk, or CRFR. Under, Governor Mark Carney. The BOE helped create the Task Force on Climate-Related Financial Disclosures, TCFD, in 2015. Carney promoted the idea that climate change poses systemic financial risk, legitimizing nature as a priced asset class. His 2015 Tragedy of the Horizon speech helped shift central banks into climate risk modeling, laying the groundwork for natural capital finance. I just want to point out that 2014 was the first time that there was an urgency of climate change. And in 2015, Carney created this financial model. So it's all by design. It's all artificial. All of it. There was a history since WEF was created, but no one heard of WEF. No one gave a shit. No one heard of Maurice Strong. No one heard of any of this shit. I didn't even really hear Prince Charles. I knew that he cared about like birds and and conservation, despite him killing and poaching while hunting down animals and enjoying that for a nice hobby. I just thought he was like, yeah, I love the forest and the arts and stuff. Like no one thought he was such. He wasn't even an activist because it was not allowed. It is not allowed. A ceremonial monarchy, it is not allowed. It is only since transpired when the Queen died, and it has become more and more prevalent and more forthcoming and in media. They've hidden it all this time, despite all of these plans and strategies happening since the 80s with Charles and his father. Oh my God, his father was the one running it before Charles was, and Charles has carried that on. And of course the Queen was involved. But all of this has been happening covertly for so long. It's really, really interesting that all of a sudden, 2014, 2015, environmentalism appears as relevant. It was the whole point of this restructure. There was no longer peace that was necessary. It's going to be for the environment. And they want to sustain it to be able to create an economy from it. They want it to be real. They want it to be long-serving, not like peace. Peace was a little more short-term in a sense, because the supposed enemy was defeated. But then they tried to prolong it with communism, and communism being still an enemy that could interfere and impose in all of our countries and so forth. They tried for it to continue, but it didn't. I mean, now they're literally capitalizing from even the means of how they're going to restructure. So, and B, green finance strategy. The Bank of England's work helped standardize nature as a financial asset, creating the ecosystem and pushing the financial ecosystem and pushing for stress testing banks for climate exposure, recognizing ecosystem services in valuation models, integrating carbon markets into global finance. These structures are built and normalized by a constellation of actors: investment banks, Goldman Sachs, JP Morgan, Rothschild, etc., Big Four firms, Ernst & Young, PricewaterhouseCoopers, Deloitte and KPMG, consultants and auditors, think tanks, World Resources Institute, Natural Capital Coalition, I'm sure Heritage Foundation, ratings agencies and data providers, Moody's, S&P, Vera, etc., asset managers and insurance firms seeking long-term yield. And with those think tanks as well, a lot of, with a lot of these different organizations, a lot of people that are very knowledgeable of foreign policy would know all of this is happening as well. Ratings agencies and data providers, yep. Asset managers and insurance firms seeking long-term yield, legal firms crafting the contracts, ownership models and IP structures. These were the same actors, all of them, of the GFC, of the global financial crisis in 2008. A system built on safe yields for the private sector, cheap finance for governments, and a regulatory class sold on technocratic risk transfer. The United Kingdom played a central strategic role in incubating the financial architecture behind blended finance, natural capital, and the broader financialization of nature. What we're seeing today in climate and ESG finance can be traced back to British institutions, policy labs, and financial elites who developed and exported those models globally, such as open banking. 1. The UK as an incubator, policy lab for green finance. The UK City of London has long been a global hub of finance innovation, from euro-dollar markets in the 1960s to carbon trading in the 2000s. More recently, it became a testbed for blending public and private finance in climate and development sectors. Key institutions: Bank of England under Mark Carney, HM Treasury via the UK Green Finance Strategy 2019, British International Investment BII, formerly CDC Group, the City of London Corporation, a key political financial player, Oxford and Cambridge policy academic think tanks, UK-based NGOs and consultancies like Climate Bonds Initiative, Yen, etc. Carney's doctrine around climate risk as financial risk gave intellectual and regulatory legitimacy to the idea of pricing nature, which made blending public and private capital in forests, carbon, and biodiversity a responsible financial move, or ethical, shall we say. 2. British Empire DNA. Scaling through its global network like open banking. Once these models were built, they branched out through Commonwealth networks like Australia and Canada, British-controlled development banks, example CDC, BII, DFID, influence in the UN system, especially UNEP, FI, GEF, City of London's dominance in green bond and ESG structuring, multilateral boards with UK-appointed chairs or board members like Gavi, GCF, etc. This echoes colonial patterns. Britain designs a financial toolkit, then exports it globally, using its network of multilaterals, NGOs, and development finance institutions, DFIs, as delivery arms. See, you don't even need to go through history. You can just go through the current system and know that there is a British Empire and an imperial policy being played out before you for the restructure, which is branded as Agenda 2030. The pilot for global rollout, UK-based initiatives. Some major first movers were launched in or by British institutions. Natural Capital Protocol from UK-based Natural Capital Coalition. Dasgupta Review, commissioned by UK Treasury 2021. London Stock Exchange's work with natural asset companies, NACs, and ESG standards. Blue bond pilots through British-linked finance mechanisms. Even the Moringa Fund was early and directly tied to Rothschild London-based, which suggests long-range planning and piloting before scaling. 4. The role of the Crown and soft power. Let's not forget the soft power role of the British monarchy in promoting this. King Charles III has pushed natural capital and ESG investing for decades, e.g., via the Accounting for Sustainability project. British royals and elite institutions have aligned with Nature Finance, WEF, and the UN, positioning nature-based finance as moral and inevitable as part of their corporate structure. This green crown diplomacy provides ethical cover for what is structurally a financial enclosure project. 5. Final truth, a neo-colonial financial empire. This system was invented in Britain, yes, but not just for Britain. It is crafted as a post-Bretton Woods, post-imperial tool to maintain financial dominance, control natural resources globally, create rentier models of profit extraction from the global south, and shield capital from risk while shifting burdens to states and citizens. You, us, and our states and our countries and our sovereignty will be the things to be sacrificed, will bear the costs. It's colonial logic rebranded in green language, a form of green imperialism. Together, King Charles and the City of London Corporation have played a crucial role in laying the ideological, institutional, and financial foundations for natural capital markets, green finance, and ultimately the blended finance architecture that we see being exported globally. Let's break it down clearly and factually. 1. Charles as the architect of sustainable finance narrative. Long before he became king, Charles was laying the groundwork for the financialization of nature. Key initiative, Accounting for Sustainability, A4S, founded in 2004. A royal-led project to embed environmental and social metrics into corporate and government finance, focused on making nature and climate financially reportable. Push for the integration of natural capital accounting in both public and private sector balance sheets. The ultimate goal, create standardized frameworks that allow nature to be treated as an asset class. He did that something quite similar with Interfaith and a business leadership forum in the early 90s, late 80s. This project influenced TCFD, Task Force on Climate-Related Financial Disclosures, Natural Capital Coalition Protocol, IFRS Sustainability Standards, and the Dasgupta Review UK Treasury 2021. Charles didn't just support these, he governed the actors that built them. 2. The City of London, the engine of implementation. The City of London Corporation, a quasi-sovereign body that governs the UK's financial district, has worked in lockstep with Charles's initiatives. It provided political insulation from Parliament. The city has autonomy, a global financial and legal infrastructure for ESG, carbon biodiversity, and blended finance vehicles. A launchpad for green finance standards, including green bonds, nature-based solutions, and natural asset companies, or NACs. Key collaborations. The City of London's Green Finance Initiative 2016 aligned directly with A4S and Bank of England's climate agenda. City of London conferences and roundtables help shape ESG taxonomies, investment tools, and legal vehicles for asset structuring, not restructuring, structuring. Together, Charles and the City position the UK as the ideological and structural capital of the new nature finance order. 3. The Royal Finance NGO Nexus. Charles has used his royal platform to unite the financiers, policymakers, and environmental NGOs behind this agenda. The key networks that are involved are the World Economic Forum. Charles launched the Sustainable Markets Initiative with WEF in 2020. World Resources Institute, WWF, that Prince Bernard and his father, Prince Philip, created, as well as Club 1001, Nature Finance, and others aligned with his ethos and his father's and Prince Bernhard's legacies. Corporates like BlackRock, HBSC, Unilever, and BP were brought into green transition pledges under royal auspices. You think BlackRock is bigger than Charlie? Think again. This multi-stakeholder ecosystem allowed the creation of carbon markets, voluntary biodiversity credits, nature-based investment products, all framed as just and sustainable despite highly extractive structures. 4. The Crown Estate and nature as revenue. Here's a critical and under-examined part. The Crown Estate, a massive real estate and resource empire owned by the monarchy but managed by the state, includes forests, seabeds, and agricultural lands. These lands are now being positioned to generate revenue from carbon credits, biodiversity units, and leasing rights for wind and solar. Remember that revenue stream and that revenue restructure of Charles. Again, Charles's legacy is essentially turning the Crown's landed wealth into financial instruments under the guise of saving nature. This model is being copied in developing countries where forests, coast and indigenous lands are being repackaged as natural capital assets, often through blended finance vehicles subsidised by public money. 5. From patronage to policy influence. Charles used his role as environmental statesman, I'm guessing global statesman to go with it, to shape actual policy through UK Treasury, Dasgupta Review, UN COP summits where he speaks as a head of state, World Bank and IMF green finance strategies. See, if he's speaking at the UN as head of state, what do you think Harry is speaking as when he speaks as a global statesman at the UN under his father, the head of state? Or let's say when William speaks, or Sophie, or any of the family. World Bank and IMF green finance strategies, where the UK is a major stakeholder, NGO board memberships and royal patronage to lend legitimacy to private sector carbon and biodiversity markets. It's soft power, but extremely effective. The royal family helped normalise the pricing of life. Summary: Charles is not just a symbolic figure here. He is arguably one of the central architects, ideologically and institutionally, of the current model of nature as asset, blended public-private financing, ESG-aligned capital markets, and Global South resource extraction framed as green development. And the City of London Corporation has been the machinery turning that vision into a legal and financial system. And now when I show you these images, it will all make sense. The Earthshot Prize. Terracotta. The Great Reset. The Air at the World Economic Forum. The Spare at, the Clinton Global Initiative. Thank you. So the next parts will be talking about open banking, how open banking digital ID is connected to blended finance to create this ecosystem, the back end and the front end of it. And then we're going to go into how crises of war, pandemics, the GFC or economic crises, and depressions, and recessions, and what else was there? And these climate events have all helped in the moving forward of this ecosystem. Thanks, guys.